My first guest this morning, Alejandro Zambrano, Senior Analyst, ATFX. Good morning, Alejandro. Thank you so much for joining us.
Thank you so much for having me once again.
So Alejandro, there are a few very interesting things regarding the recovery fund because certainly the very first proposal was for 500 billion euros of grants, and right now currently we have 390 billion of grants, which is certainly something very positive, but still less than at the very beginning, the very initial proposal. So can we describe this as a success? Do you personally believe this deal, this agreement is a success?
I think what's good here, and what's different, yeah, overall I think it's a success, to answer that. But I think what's a bit different here before, what you would done traditionally is that you would lend this money to these countries, and then these countries would need to repay that at one point. So what's obviously the big change here is that they will collectively borrow this money, and then they're giving this as grants to some of these states, and some of these states already have very high debt-to-GDP ratios. And if you guys remember the crisis in the euro area in what was it, 2014 or something, many years ago, it was all talk about debt-to-GDP. So this obviously circumvents that issue by giving grants. So I think overall success is a new way of dealing with things, and I think what is good here is that they're looking at the bigger picture and seeing how they as a big group can help each other, instead of trying to, for example, make sure that obviously everybody has to do what they can do to optimize. There's always a risk of moral hazard in these situations, because what are they going to do this again if you have a similar situation? It could be more of that, and if it becomes something like that, then it's obviously you can increase your risks without necessarily doing any of the reforms that are required. But I do think for now, from an investor's perspective, that's something that investors think that we can worry about later. But obviously, again, if we have a new crisis, are we going to do this again? Are there going to be any rules here in place? Most likely it will be. So I think overall it's a success. It doesn't hurt the debt-to-GDP ratios as much as it would have if these countries that need the money the most would on their own borrow this money.
Of course, we saw a lot of optimism on markets. I just want to show once again to our viewers, specifically the European markets, the DAX is 1.7% higher, the CAC around 1% higher, and the FTSE 1.24% in the green territory. Do you believe this market's optimism, of course, caused by the recovery fund, is going to last in the medium to long term, or it's just a one-day reaction?
I think it's going to last for the longer run. I think so, because there's more than just this underlying. So we have this rescue package, we have all the stimulus that all the different countries have done, and we have all the QE, and that is like a huge amount of money that needs to be pushed into the markets here now. And what's happening is I think, of course, the DAX, for me, it reached my take profit level here. Yesterday, I told people to look to get involved and buy at 12,800. And we're now at my take profit level. So I wouldn't be buying like here, but maybe if we go back to the high we saw here on June 8th, that will be the 12,300 and 12,939 level, maybe buying on a dip and then targeting the yearly high. I think that would make sense. And again, you have this stimulus package, you have more news about different vaccines, and we have the Oxford vaccine coming out. We have the Moderna one that they're talking about, and then there was another one too as well. So there's a few of them, and it looks to me at least that we will have something by summertime. So you got the vaccine, you got all this money, you got this stimulus package, and also in the U.S., the number of cases have risen sharply, as we all know. But if you look at the numbers of deaths yesterday, we only had 545. And the day before that, we had 412. So we're sort of back at low levels what we've seen before. And as long as daily deaths in the US remain below 1,000 per day, I think people will continue to buy stocks. And what's also really interesting is if you look at places like Twitter, like I follow Twitter and I follow the bears and the bulls, but for some reason I have more bears than bulls on my feed. And they haven't given up, these bears. Like most people, it feels like they're all betting on like stock markets to come down strongly. And you know what? They might be right. But over the last couple of months and weeks, as we know, the winning side has been the bulls. So until the sentiment reverses and these bears start to acknowledge that the trend is upwards, I would be continuing to be a buyer.
That's certainly fantastic. Before we move to the foreign exchange, where the situation is also pretty interesting, I'd like to talk about the US markets, because what we are seeing specifically regarding the NASDAQ in pre-market, 0.73% higher, 11,031 points. I mean, this is fantastic, crazy levels over there. You know, each second day of the week, it's hitting new all-time record highs. Why are investors so much into the technological sector? Is it because the fundamentals are good over there, or it's because there isn't anything that looks attractive?
I think what happened here is that you had some companies like Zoom, for example, like that's like poster boy for this time. In England, we're talking about 𝗿𝗍𝗄𝘁𝗄𝗃, which is like a company that would do food delivery to your door, right?
I think we have some problem with the connection. Certainly, we're going to. Are you there, Alejandro?
Yeah.
We lost you. We lost you for a second. Okay, go ahead. Go ahead.
Okay. All right. So what I was saying is that it started out like a good and fundamental reason to buy all these shares. And for example, like Zoom and Netflix, you should definitely have been buying them over the last couple of months. And then what happened is that people saw all this massive growth, and then you have people sitting at home that have a bit of spare cash and they want to get involved. Like within the brokerage industry, like you've seen some brokers, like whatever they would have in new clients over a year, they had that over like a period of 1 to 2 months. So everybody's sort of getting involved. So what's happening here is that you had this good idea to buy these shares. We've gone up and up and up. And I think what's happening now is that people are just buying because the price is going upwards, plus all the other factors. So I definitely think we're a little bit elevated. For example, in the NASDAQ 100, we have risen, well, it is some 63% from its lows, and 66%, yeah, from its lows. I think from the beginning of the year, we're just up with about 30%, so that's not too much. But yeah, I think it's like a fear of missing out rally. You know, people just getting involved because the trend is upwards. So I think there will be a bit of like problems for retail investors here in particular, and investors in general. And maybe when something like the Dow Jones reaches its 2020 high, or when the German DAX as well reaches its 2020 high, so when everything is starting to go to a new 2020 high, I think that's maybe when we start to be a bit more cautious.
And what about the S&P 500? What kind of levels can we imagine over there? It's also doing great job in the last 2 months so far, 3,251 points. What kind of levels do you imagine over there, at least in the medium term?
So there was a beautiful ascending triangle that formed in the S&P 500 between June 15th, and that pattern properly triggered on July 12th. Now that ascending triangle has a target of 3,339. So that will be the target. And at least in the very short term, you know, if you want to hold positions for a few days, then I think yesterday's low is going to act as support. And if we go down to something like 3,243, which is the high from last week, if we go down to that level, I think people are going to be buying again, and then they're going to try to lift the price to that high. And you know what? There's a bunch of stuff here. Everything is super correlated, and everything is sort of driving and pushing each other up. I don't know if you saw this, but Brent crude oil had a bullish breakout today, and also West Texas crude oil, after trading sideways for a bit longer than a month or so, we're starting to see higher crude oil prices. So all of these markets are triggering each other, because now you have like stock market traders saying, oh yeah, I should buy more stocks because oil traders think the world is going to improve. And oil stock market traders are looking at stock markets and say, oh, look, you know, the stock markets are going up, so the world is going to be better. So we are sort of having that positive feedback loop. The only thing that's a bit confusing is gold, which is also going up with all the other assets at the same time.
And what about the cyclical stocks? Do you believe we're going to see an increase of the levels over there since we saw some macroeconomic indicators that were signaling an economic recovery?
So, yeah, that's a trickier one for me to answer. If you look at some, I mean, in Europe you can definitely have a recovery. Like some companies that have been hurt badly, as long as they have a good product behind them and they were doing okay before, then yeah, you can look into it, you know. Like right now, people don't necessarily want to buy cars, they don't necessarily want to buy trucks and don't want to buy things like that. But 2-3 years from now, I do think they will want to do that. It's mostly sort of the service sector that got itself like a big hit. There are certain things like, well, like, I don't know, I'm deviating now, but for example, you have Cineworld in the UK, which been totally hammered. They have as well like cinemas in other places of the world. Like their share, I'm looking at the share price right now, it's called Cineworld, and from a yearly high in December, the price is still down with 76%. At one point, it was down with 92%. But I think fast forward 2-3 years from now, I do think people are going to go to the cinema again. I'm quite confident about that, especially if we get a vaccine. So you have some of these industries that were doing good before that will most likely bounce back, especially if we have a vaccine. Remember that even with the Spanish flu and everything, it looked like the world was going to end. Far more people died back then than they're doing now. But at the end, we recovered. I find it so interesting as well. Like, I'm deviating again now, sorry about this, but people really think that we're going to be working from home forever. I don't think so. I think as soon as things go back to normal, the first thing the employers are going to do is tell people to go back to the office. So we will come back to some normality. And if you bear that in mind, and if you have an investment horizon of at least 2 years, then there are definitely some gems out there that you can get involved with.
Well, I want to move to the foreign exchange. Very quick look at so far the current situation. The DXY lower by 0.15% at 95.67 mark. Euro dollar 1.14, and sterling against the dollar so far 1.27. It's up by almost 0.4%. A very interesting situation over there. Why is this pressure on the dollar index? Because we do see it at these current levels between 95 and 96 for quite a bit time, actually, I shall say.
Yeah, I find this quite curious, and I think maybe the number one motivation could be, but we haven't seen this for a long time, maybe the number one motivation is like they're looking at the US and they say, if we don't get any vaccine, if we don't get things sorted over there, they would need to close their economy. That could be one reason. So people say, okay, where is it working? Well, things are working okay in places like New Zealand, Australia, to some extent, actually. I'll take back what I said about Australia. But things are working okay. And for example, in Europe, things are improving, right? We're having the situation under control. And then in the US, things are going, unfortunately, in the wrong direction. So it could be a play like that. But the thing is I haven't seen a play like that for a long, long time. So I think, again, that could be what's driving the dollar index lower. But so I personally think like this. If the US is forced to shut down, I think the whole world is going to go back into risk-off mode. You see lower stock markets and the dollar gaining like it did last time. So I personally think that, you know, you have in the DXY, you have the yearly low at 94.70. I think it's quite unlikely we're going to break that low. I'm not buying the dollar here, though. In fact, I'm selling the dollar. Like, I'm long gold, I'm long heating oil, and I'm also long the Russell 2000. But I don't mind being long, again, selling the dollar against gold and silver. But I wouldn't necessarily be buying it against the Aussie dollar and the euro, because I don't really think the euro is going to trade much higher than the yearly high. It might go up to 116, but then it's going to come out of the blue. Out of the blue, we're going to have a change in the mood, I think, here. And one of those triggers could be, again, if we see higher deaths. I think it's unrealistic in general that the dollar is just going to weaken and weaken. I think ultimately people are going to come to their senses and they're going to give it a bit of support.
Well, let me ask you then, do you believe the euro-dollar cross, which is currently at 1.14, I mean, this is the new normal in terms of target, because specifically after the ECB last week, we do see a very strong euro-dollar cross, but of course it's also because the dollar index is pretty weak.
Yeah, that's the number one reason. Everybody's just selling dollars. I think that's the number one reason why we're having this move here. It's not really about the euro. I mean, even if you look at the pound versus the dollars going up, even though we have Brexit issues. So yeah, people are selling dollars, and it could be, again, I think the best explainer would be US shutting down, Europe enjoying that benefit. But we've seen it many times before. You can have a play like that because the markets are binary many times. If we're stuck in this state now, where things move relatively slowly, we can continue to see weaker dollar. But then suddenly, if you switch and people start to say, oh, hold on, the US is shutting down, then you'll have stock markets going down again. You have a risk-off mode. And then suddenly, people are starting to sell emerging market currencies, and they start to, against the dollar, and you start to see the EURUSD and GBPUSD and Aussie dollar and New Zealand dollar going down a bit. Now, we don't have to complicate it too much. Like from a sort of trading perspective, like if you do look at something like the Aussie dollar, I did suggest to people in the daily presentation I do for ATFX, I've been bullish for quite some time, actually. I mean, bullish for more than 2-3 months. And the latest idea was to buy around 69.57. And I think we're now trading at a new 2020 high for the Aussie dollar. And I think we can go maybe up to the levels we saw here in April 2019. So that would be the 72 level. Now, I wouldn't be buying here, but as long as you trade below the July 16th low in the Aussie dollar, we can be buying dips, and we can try to push this all the way up to 72. If that makes sense.
Let me ask you one final question, and it's actually, you just touched upon it, the emerging markets. Can we imagine a lot of defaults over there now that a coronavirus outbreak is really hitting these emerging market countries, like, for example, we can see India or Latin America, not to mention the US, but certainly the US is not an emerging market?
Yeah, that's a very good question. I don't keep track exactly that part of the economy, but it wouldn't be unsurprising. Like there are issues in these countries, emerging markets. Like I have family in Chile, for example, and you know, they locked down months ago, and they've been on lockdown ever since. You know, people stay home, even if they don't tell you, you know, you don't have to stay home necessarily. They will still stay at home. You know, even if you have some liberties. So yeah, that could be like a black swan event or something like that. I mean, some people probably, there's probably some analyst over there that knows more about it than I do. And that could be something to keep an eye on, because at one point we will see the ramifications of this. If you think about it, the UK GDP number, it was out last week, right? And the year-on-year change in the UK economy shows for a loss of, I think, was 22%. And I think it's by August, I think, or, that all of these different support systems that the government has implemented, they will start to, those deals are gonna not be extended necessarily.
Right.
So then you would need to, these companies would need to support themselves. So I think we will see problems. It's a ticking bomb for now to some extent, unless, for example, the UK opens up really quickly more, which I don't think it will do. A lot of these companies will go bust, and we will see problems in the market. But for now, people are sort of ignoring that.
Right.
But there will come a situation, I think, when it's going to come back. When it's going to happen, I don't really know exactly. But keep an eye on the number of deaths in the US. I think that's the most important thing for now.
All right. Thank you very much. Alejandro Zambrano, Senior Analyst, ATFX. Thank you for joining us. Have a great day ahead.
Thank you. You too. Cheers.